Hello, this is Patrick White with your Monday, July 27th morning market update. Overnight, we've got outside markets slightly higher here to start the week. The September S&P is up 18 and 3/4 handles at 3222 and 3/4. The Dow Jones is up 131 points at 26,454 points at this time, and the Nasdaq is still leading up 100 points here at 10,559. The stock market is seeing some light buying here overnight. Traders are holding the stock market up well despite the growth in COVID cases over the weekend in highly populated areas like Florida. The stock market is staying afloat, anticipating a new COVID aid package by Congress expected to be coming here very soon this week or next week, and the reopening of the economy around the world is also keeping the stock market bid. The September S&P has found buying just under the $3,200 level and is floating around the 3233 previous breakout level this morning here at 3222. I am watching the $3,200 level this week and the 3,100 point level if things sell off further. Losing 3,100 would signal the end of the trend for me. So grain markets here were pretty quiet overnight. We started out here a little bit lower in the early goings, and now we're a little bit higher here. December corn is up 1/4%, currently at 3.35 1/4. November beans are up 3/4 at $9 even, and that's still acting like a magnet there, that $9 level. Corn is seeing some two-sided trade here to start the day. Longer-term forecasts over the weekend did turn a bit drier here for the northern Midwest. However, beneficial rainfall did fall over the weekend, with many areas receiving 1 to 2 inches in Nebraska, especially eastern Nebraska, southern Minnesota, and Iowa. The heaviest rainfall was in southern Minnesota. The trade is trying to rally corn on both hope for better exports in the near term and the corn-wheat spread unwinding as wheat is down here, but corn is seeing a little bit of firmness from that. The corn market is stuck here, however, without being able to get a sustainable rally higher without weather taking a turn for the worse. And I think at best, this market's just a trading range in the December contract between 330 on the low end and 340 on the high end without anything major changing in the weather. So soybeans are lightly higher here overnight. And traders did come in a little bit lightly lower here on the opening, about 2 to 3 cents lower, but bought it back quickly. The soybean market continues to be all about the expectation around better export sales. Traders are expecting to see more sales here early in the goings this week. However, with the actions last week regarding the U.S. consulate being closed in China and the U.S. closing a Chinese consulate in Houston, traders are increasingly on edge about trade tensions escalating between the two countries, and they're frankly wondering if we're going into another Cold War with them. The soybean market is still range bound at this time, as the better trade demand battles over the ideas between the non-threatening weather and the continued expiration or the continued expectation of Chinese purchases. So, just the weather and demand are the battle. I think we're going to see probably some range bound trade here between this 903.5 level down to the 890 level here early going in November beans this week. So. That's all I've got for today. Have a productive day out there, and remember that there is significant risk in trading futures and options, and it is not suitable for all investors. For more information on commodity markets, give me a call at 712-262-7606. Thanks.